What's up guys, Mullins Momentum here, and welcome back to another video. In today's video, I'm going to go over chart patterns. I'm going to show you some examples of bullish chart patterns, bearish chart patterns, and then some intermediate that can kind of go either way. I'm going to try to pull up some examples from recently too, so you can see more of an up-to-date example of these patterns. As always, if you like the video, be sure to give it a big thumbs up, sub to the channel so you always know when I'm either going live or posting new content. Let's get right into it. All right, guys, so I found this nice diagram. I Googled it, tried to find a nice simple one that you guys could understand. And it looks like it was created by Sohili PKO. So I appreciate them for making this diagram for us. But I just want to kind of go over each individual one and kind of talk through what I see here. So first one it's starting with is reversal pattern. So that means, like, say a stock's going up and it's getting ready to turn and go down. Or vice versa, a stock's going down and it's reversing to an upside. So the first one is a bearish double top. So the price is going up, hits a specific level, comes back down, and then comes back up to retest this initial level it couldn't get through. And then it is only bearish when it breaks below the level that it bounced from. Because if it bounces a little higher, it's setting up a completely different pattern, which we'll go over later. But if it tops once, comes down to a specific level, it doesn't have to be anywhere, on the initial leg, but if it bounces and then tops again, and sometimes it's, a cent or two off, doesn't have to be perfect, and rejects that and comes down below the level that it bounced from, that's the bearish double top. So I feel like most of you have probably heard of a head and shoulders pattern. That's a pretty common bearish one. That's when you get your first shoulder, so it comes up, first shoulder, comes back down to a test and pushes higher. So it is bullish at the moment, pushes higher, makes a top, and then that pulls back to the same general area that the first pullback happened. And then the third final shoulder is lower than this middle top. So you got your first shoulder, your head, and then your second shoulder. And then only a break below this line is when it becomes bearish. If it holds this pattern, it could be forming something else. But as long as you get these three different tops, which is the shoulder, head, shoulder, and the breakdown below, that is when it becomes bearish. So when you're trying to play, if you're on the short side, you're trying to play bearish, you can't just assume that something's going to happen. The breakdown is below this line, confirmation below this line, not, trying to just guess that it's going to break down, etc. Because sometimes it doesn't. Sometimes it doesn't break down. Sometimes you'll see it go higher. So you need confirmation on the breakdown. Now you can take and kind of assume that it's going to break down, but you need a stop loss probably above this second shoulder line, because the second it goes above the shoulder, it's a completely different pattern. The next one is a rising wedge, which is higher highs and higher lows. So it comes up, hits a high here, pulls back, it's a little bit higher, pulls back to a little bit higher zone. So you see it keeps getting tighter and tighter and tighter. And most of the time, this one will fall out. I have seen them break out before. It's very rare. But this is mostly bearish to where it gets tighter and tighter, higher lows, higher highs, and then a breakdown below. And it's only bearish, like I said, once it confirms below this level. And usually confirmation is like the close of a candle or increasing volume. You can see like this breakdown and it fake out and hammer back up into the pattern and then break out to the upside. But generally, overall, the rising wedge is a bearish pattern. Now, this expanding triangle, it's not something I see very often. It looks like higher highs and higher lows, but it's kind of less symmetrical, I guess. It opens instead of it closes on this end. It's very strange. It looks like the pattern gets wider and wider as we go. That's not really a pattern I see very often, but it looks like, as always, you break below this trend you're making. And of course, it goes back to trend lines too. I did the video on trend lines before, but if you go back and you look, under trend lines, and it's got to be confirmation, either candle closes or volume increases, that's when it becomes bearish. The triple top is very similar to the double top. It is just coming up, testing this level, rejecting, but holding a level, coming up, testing it again. So it's not the head and shoulder. It didn't go higher this time, But then, as this one did, and comes back to the confirmation below, it tests the bottom again and holds. So it tests the bottom again and holds, and then pushes up one more time and can't break through. Then, when you break below this line here, it's the follow through on the bearish side. And usually something that lasts longer, say, like this is a quicker pattern, it's just a double top, but the triple top, you'll get more of a violent reaction. It's more bearish overall than, say, a double top, because it confirmed not only twice that was the top, but it confirmed it 3 times. And that doesn't mean top forever. That doesn't mean all-time highs. That just means, top for now in the immediate action. Double bottom, about the same thing as a double top. You get a bottom, you get a try to reverse, but it can't get above this level. Come down again to the very similar level. It doesn't have to be spot on, same exact cent, but come down to this level, test it again, and it becomes bullish whenever you break back above this line. So not only does it need to turn around, you shouldn't be guessing bottoms, but it becomes bullish when you break back above the level that it rejected from before. So that's your double bottom. Inverse head and shoulder the same way, and I don't have to explain every single one of these in such detail, but it makes the first shoulder, comes up, test the line, makes a little bit lower, comes up, test the line, and then it goes back and makes that second shoulder, and then that is the reversal above this line. So that's more bullish. And this is, like I said earlier, like the longer the pattern, the more bullish they are. So a double bottom is a little bit less bullish than, let's say, a head and shoulder, inverse head and shoulder, because it was a pattern that played out longer. The falling wedge is very similar to the rising wedge. It is on a downtrend. You get the lower lows and lower highs, but it's getting tighter and tighter and tighter. And this is usually a good play to play breakout of here. So once this breaks out of the pattern, it's usually a good push out of this pattern. It doesn't necessarily need to go like to where it started or even to this line, but a good breakout once it breaks out of this falling wedge. I won't go over the expanding triangle again. That's one that I never really see. This one is a triple bottom. So similar to a head and shoulder, or inverse head and shoulder, is a longer pattern, but you get the bottom, a test of a line, but reject, pull back again, test, pull back again, and then finally break out of the level, and it is bullish once you come above this line. Now, these are continuation patterns. So these up here, like I said, were reversals. So this was going up, it's now going down. This was going down, now it's going up. So these patterns down here are you're going up, and you continue to go up. So I push through a level here, and then lower highs as well as lower lows. So you're forming what looks like a flag. This is the flagpole, and this is the flag. And then it's bullish on the break above this line, bearish on the break below this line. A pennant's very similar to a flag. Instead of it being 2 lines perfectly spaced apart, they get closer and closer together. So they form kind of a triangle here. So comes up, lower highs, higher lows. So instead of lower highs and lower lows, it's lower highs, higher lows. And as it gets further and further along, it can break out. It doesn't really matter. It doesn't have to go all the way to the end of the pattern to break out. You just want to see confirmation above this line for continuation. Confirmation, like I said, can be anything from high volume confirmation to even like a candle close over. Best case scenario, you want to see the high volume to confirm what you're seeing is actually happening. This is a falling wedge, so it's lower highs, lower lows. So let's say this is breaking out, it's starting to fall down. Very similar to the flag, but you see it's instead of it's perfectly symmetrical here, it's getting tighter and tighter and tighter as a breakout. Now, ascending triangles when you see a lot. Before and earlier this year, you would see ascending triangles that would fake out, and they would push up through and then break back down immediately and fail. And we would call it like a fake out breakout, or we would call it the 2021 candle, because it started happening so much last year that you would get these bullish patterns that would break out and then full fail out the bottom side. So that's where you want to see the confirmation with positive buying volume through these levels instead of just like the candle pushing through. So volume confirmation is the most important here. But this one, you get your top, a higher low, top, higher low, top, higher low, and it continues up until it finally breaks through this straight horizontal line that you're getting. So instead of it being like a triple top here, if it was a triple top, these lines would all be symmetrical too. So it would be straight across here. But it is an ascending triangle when the bottom end is moving higher and higher and higher. This is a symmetrical triangle, so it's in a big triangle that never really came up. It is just moving within a triangle and getting tighter and tighter and tighter. And as you see on this, it can go up or it can go down. So it all depends on conformation of volume through the bottom trend or the top trend. This is a bearish flag, so coming down, getting a higher high and a higher low, but breaking below this bottom line. So it's the same thing as a flag to the upside, but it's a flag to the downside. This one's a pennant to the downside. This one is a rising wedge, which is coming down and then going higher and higher. Very similar to the flag, but getting tighter instead of being symmetrical. This is the descending triangle. So instead of the ascending triangle with the top getting ready to break out, you get the bottom that's set up. And these can break out and these can break down, just like I said. So if this breaks out of the top side, sure, it can go up. But most of the time, a descending triangle is bearish. So it's coming down, making a clear bottom line and higher lows. Or lower highs, lower highs. And then the last thing is that expanding triangle again, which I won't go into much detail. Next, I'm going to try to pull up some runners from this week, see if I can find some patterns that I like, and I can show you real world examples that actually broke out from this prior week. All right, guys, so the first example I can think of from this week is QNRX. QNRX had an absolutely insane run from around the $4 range all the way up to 28. So it was a crazy runner, but it did have a very, very nice pattern. You can see it right here. This was after I'd already started running, and it formed a really pretty ascending triangle. So as you can see, it has the higher lows, higher lows, higher lows, higher lows, and then it never had a 5-minute candle that closed over 1375 until it had the breakout candle. And look how insane of a breakout this was. Absolutely monstrous ascending triangle. So it got through the level of 1375, went to 16 on the same 5-minute candle. This is not an average breakout. This is an insane, like, high volume. This is like 1 million every 5 minutes. For a low float, it's quite a bit. So this got the breakout and then pushed all the way up to $28 within the next 20, 30 minutes. So it was absolutely insane end-of-day breakout. This is when we were getting some crazy action off of HKD, things like that. But this was a really nice example of an ascending triangle that you see. I went to the 1 minute as well, and you can see that it's also could be looked at as a wedge or a symmetrical triangle, however you want to call it. It formed the bodies here, and it had higher lows. So it's a little bit off. It's not perfect. You got this falling underneath the pattern. You got this falling underneath the pattern. So you could tweak it a little bit to down here. And it this is 1 minute, so it's not as important as the 5-minute pattern. But it did form higher low or lower highs and higher lows, which in 10 broke out. And it was the same breakout level. The ascending triangle was a little bit stronger on the 5-minute. But it's the same breakout level. And it pushed through all the way, like I said, to 28. So this was an absolutely insane breakout. As you see, after it broke out this level, look at the relative volume. Absolutely insane high green relative volume, and halted up around 24, ran ultimately over 28. So another example that's been running lately is SIGA. So here's SIGA. SIGA has been running on monkeypox news, so it didn't specifically have huge news recently, but the monkeypox news has been on the news. It's got recent national emergency news, so it does have some patterns here. You can see, like, I bet on the 1 minute, this one was forming, let's see. So this one's a little bit of that one's almost a descending triangle. Remember we were talking about it earlier, descending is usually bearish, but this one turned out to be, I guess, just symmetrical enough or just enough of a wedge to break out. It's not really a falling wedge because it's actually going higher, but it did break out of this wedge pattern and push up. And as soon as it pushes through, and remember I was talking about volume confirmation. Look at the insane volume that comes in, especially the one I just showed you on QNRX, and now this one on SIGA. As soon as it breaks through, it's not just screwing around, it's not trying to wick around, it's getting a huge influx of volume, and that leads to so much continuation on this pattern. And you can see patterns, and I don't know if this is going to have a specific one, but you can see them on the daily, you can see them on the 30-minute. So this is not really perfect on the daily, but actually. So if you drew, and it's going to be rough, but if you drew this, and even, the 15 level, it's what it struggled with for a long time. It was a long ascending triangle. So it kept getting up near 15, rejecting, and then it finally broke through. And you see, as it broke through, relative volume much higher, and it ran all the way from 15 to at the high now is 23, 24. So the daily patterns, they seem to be stronger the longer they develop, and they last longer. So a daily ascending triangle, the breakout's going to be for days. A 5-minute ascending triangle could be breaking out for 5 minutes at a time over like 30-minute period. So the longer the pattern sets up, the bigger the breakout usually, and the longer the breakout usually. Let me look at something else. Like AMTD was running off of HKD, so they actually own part of HKD. I think HKD was the spinoff from them, and HKD was the big runner from this previous week. Ran from like 7 IPO all the way up to $2,500 or something, just absolutely insane. So this one, and patterns just like trend lines can be read kind of in different ways. Like you could look at this as, this was just a channel, just a straight up channel. It went from here, rejected the 10 level, rejected the 10 level, rejected the 10 level. It's not really going higher. And then the same thing with 775 to 8, it's support. So this can be a channel on the daily from 8 to 10. And then once it finally broke down below the channel, look at the volume. You see how it's kind of slower volume here, and then once it got through the trend line, look at the increase of the red volume. So that's your volume confirmation of the pattern breaking down, the trend breaking down. It tried to break it out here, and it had a big green volume stick on this one, but it ended up fading back below on the 5-minute, and it never got through. It rejected the trend and pushed all the way back down to the bottom within 10 minutes. And look how well these lines were respected. It got back above 8, rejected this level, finally broke through, came back underneath, and then it held it as support again until it finally gave it up and then faded off. This was more of a bullish pattern here. And as you see, this, not always do you get bullish patterns breaking out to the upside. So this is a bullish pattern that it had right here. It had a nice little wedge, symmetrical triangle, whatever you want to call it, which is usually a bullish setup for continuation, but it went up, tested here, and then finally fell back through and couldn't do it. This was in after hours, so there was much less volume. Maybe that's why I couldn't make the push through, but it was set up to go higher through here, getting tighter here, higher lows, lower highs, ready for the breakout, but it didn't break out. So not all bullish patterns are going to break out. You want to see that volume continuation, or continuation and volume confirmation. So the volume confirmation here actually came in, and you see a little bit of an uptick here in after hours, but it did not break through the level pattern-wise or volume coming in to the positive side. Another one in VIV. Not much there. This one was kind of same thing, though. You see this wedge here, and I can draw it in again, and this was after hours again, or pre-market. Yeah, this is pre-market. But actually, this one, see that there's always a little bit of, your own choice when it comes to drawing these patterns. Sure, this could be a descending triangle with the bottom being right here, and honestly, it looks more like it. So this is actually a bearish pattern. This is the lower highs, and then pretty much the support level through this level at 850. So came down, finally tested through the descending triangle and broke down below. And then look at it, at open, got the volume, pushed right back up through like it didn't even exist. So this is one of those that, yes, it followed pattern until open, but the volume just came in and it completely ignored the pattern. So that happens sometimes as well. You get breakdowns, and then another factor comes in to change everything. We'll go through a couple more examples, and then we'll call it. Veru, I think it had a couple small ascending triangles that it broke out of. So you see, like, this isn't really ideal. This is not like perfectly what I'm looking at. Sure, it may be an ascending triangle right here with this being the flat top, but it's not perfect. Like, it's not, getting higher. Like, honestly, this is more of the ascending triangle break than anything. So it continued higher highs, higher lows, and then finally had that big candle break out of that. But this isn't like a perfect, this is more like a stair stepping up, and then kind of blow the top off, and then it looks like it got shorted right back down. Now these small ones are the bull flags. And this is a good example. So remember the horizontal lines that you saw? I don't know why it's trying to snap, but these horizontal patterns are the flags. So come up, flagpole here, and then go lower, and then finally break out to the upside. So that's a flag. And you'll see that a lot for something that's running. You'll see like the big flag up, and then trade kind of horizontally down, and it can be a falling wedge or a bull flag. It's about the same thing. Usually a falling wedge is more of a reversal, though, when this is more of a continuation. So a falling wedge would be, say, you're going down, and then breaking up. This was already kind of in an uptrend, so it's more of a bull flag to continue. And the last one I'll pull up is Bed Bath & Beyond. Had a great breakout. See if I can find anything maybe longer term for this that makes a little bit more sense. So here's a decent example, and it's not picture perfect, and it kind of happened in after hours, but you've got another ascending triangle breakout. So these are actually been very common lately. You got your 650 level here, reject, and then you got your higher lows. So you got from here to here, up through here. It's not perfect right here, and there's a wick here that you can connect it to, but this is on the 15-minute chart. So this is from August 1st all the way to August 5th, longer term ascending triangle. And you see when it broke out, the morning of August 5th. When it broke out, it had a very strong move. So you see it wasn't just, and Bed Bath & Beyond doesn't move crazy hard. The biggest range is usually like 50, 60 cents on a move. And this one broke out and ran from 650 all the way to 850. So that's pretty much chart patterns in a nutshell. I know I didn't go over them all. I know that there are better real world examples out there, but I was just trying to go off of stuff that ran this week. So I pulled up the diagram at the beginning to show you the picture perfect, drawing like how it's supposed to happen, the absolute perfect lines and everything like that. And then I wanted to pull up, the real world examples. It's not going to be perfect. And I was told when I first started that charting is an art. It's not a science, so it's never going to be perfect. It's never going to be like you see it in a diagram. It's an art. So you get some outliers. You get some levels that, hammer up into the channel. You get some that don't exactly connect perfectly. So that's why I pulled up at the beginning, those diagrams so I could walk you through what the patterns look like and the way that I see them. But also, pull up these so you can see like, oh, it breaks out, but then it came right back underneath. And that happens. You'll see a breakout, and you'll see it come back and test the level. That's actually big. If you don't get the crazy explosion right out the gate, from the breakout and you see that crazy volume, sometimes it'll break out and come back and retest some levels. So this one actually came back, and this was in pre-market trading, but it came back, tested the levels again, held, and then finally pushed back through. So it's not always perfectly straight up. It's not always perfectly straight down for a bearish setup. Sometimes you'll get a retest of a chart pattern breaking down, and then it'll come back down again and fully fade off. And that confirmation is always in your volume. So I hope you guys learned a little bit from this video. Try to work on, best case scenario for the chart patterns as well as real world scenarios. So if you did like the video, be sure to give it a big thumbs up, sub to the channel just so you get all the content. And I will see you guys back on stream and every day, Monday through Friday, 8 a.m.